This was as big as it can get in terms of, a capex number out of the hyperscalers, and probably because they went last in terms of, reporting earnings. But look, I think had they not gone that big, the stock would have been up because they posted best AWS growth in the last 3 years. And, sequentially things seem to be improving. It's just that $200 billion number and the fact that their margins are going down on the AWS side, that's why you see this kind of stock reaction. And there wasn't enough justification to, ramp up capex by about 55% to 200 billion.
Mandeep, how long are we going to see these massive increases in capex? I mean, this was for 2026 full year. I mean, are we going to see this for another 2 years, 3 years, or have we, is there an end in sight, I guess is the question.
So based on our work, at least so far, we feel this is the peak capex growth. You will still see growth, but it's not going to be of the same magnitude. I mean, 2026, we are talking about a year where capex from the hyperscalers will grow almost 60%. So, and last year we had 2024 to 25 was also 70% growth in capex. So we've gone from $200 billion of hyperscale capex to now $650 billion. I think that growth rate will certainly come down, but there's no doubt that, we are still in that part of the S curve where, there is more demand, and everyone has called out supply constraints, and they would have grown faster had it not been for, the limited supply they had for AI infrastructure.
So Mandeep, you talk to institutional investors all around the world here that focus exclusively on technology. Where are they? Has their narrative shifted about where and when and to what degree this industry should invest in AI? Has the fundamental view of AI and how this tech industry is going to get there, has that changed among some of those big tech investors that are big shareholders in so many of these companies?
Yeah, I mean, right now you see both, anxiety and some sort of panic as well in terms of, the level of free cash flow that's going to get hurt because of this spend and how fast it's happening. I mean, the cloud market grew almost, 20% plus for a decade, and everyone was fine. You could see, predictable free cash flows. This is a very big upfront spend. And look, it makes sense that you have to spend first to build the infrastructure. But I think you really have to take a leap of faith that all these companies that are putting, $200 billion will see ROIC for their spend. And I think that's where there are question marks that some of them may not have that level of ROIC. So I think that's what's reflected in the panic so far. But there's no doubt that, workflows are changing and there are some real productivity benefits you're seeing out of this spend.